First things first, we saw that massive sell off in cryptocurrencies on Monday. There's a lot of uncertainty about what comes next. Kevin, you've said that 20% of your investments are in crypto. How should retail investors be thinking about this sell off? Is it an opportunity to buy at a discount, or is it just too risky to make any sort of bet at the moment?
No, I mean, everybody has challenges with volatility, but I remind everybody, just go back 17 years to a stock called Amazon. It also corrected 38 to 50% every year for 12 years in a row as people tried to figure out what this new entity was. And so there's always tremendous volatility in new and nascent technologies and new markets. And crypto is a new market. I still predict in 10 or 12 years, it'll be the 12th sector of the S&P. There's just too much productivity opportunity here around payment systems and all kinds of other attributes of these blockchain projects that we just don't yet know what the upside is going to be. And I'd argue this, if you go to any graduating class, particularly now, it's very timely to say this, ask any engineering cohort, you're going to find a third of the engineers go onto the chain. They want to work there. They don't want to work in the other 11 sectors of the economy. They want the opportunity to create something new. And that's why you've got so much intellectual capital going into this space. You know with certainty down the road that the next genius ideas are going to come from this. Any college, any university, any engineer, they all want to work on the chain. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the dark side, downside risk of what happens when there's a major correction, as is occurring right now. You can get caught offside pretty quickly. And so Celsius, that's a good example of that. And I don't want this to sound trite, but let me explain how bottoms are made in any market. I don't care if you're in equities or in debt or in crypto or in real estate. You always need a big player to go to zero. That always helps, whether it's long-term capital or whether it's one of these crypto infrastructure companies. I would like to see, and I don't want this to happen, but it always gives you a good bottom when you get a large player over-levered that goes to zero. And that always tends to be the beginning of the rebuilding process. So if you have to sacrifice someone who used too much leverage, and it's always leverage that does this, somebody's over-levered, positions are complicated, they're not transparent, they're not liquid, and they go to zero. Someone is out there on the brink of zero. That's okay. In fact, I'd argue that's a good thing when we get it. Now, do we get it this week? Do we get it next week? Someone's going to zero. I don't know who, but it'll be great for everybody else that survives because everybody will learn from that. And that's what I like about a washout, an event. And I think we're due for one in crypto land. And I don't know who it's going to be, but I guarantee you 100%, I've seen this movie before, you will learn later that somebody put on a heavily levered position. They got wiped out. And it's good. It's a good thing. I don't use leverage on crypto because I've seen volatility like this in the past. There are certain assets where I might put leverage on, but it won't be in crypto. I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that. But, people will learn their lessons. This is a good thing in the sense that this generation of crypto investors has not gone through corrections like this and not gone through them with leverage. Now they're going to learn an important lesson. Everybody I know that has survived volatility has had a very important lesson or a date with leverage. And they didn't have a great dance that night, I must tell you. I think right now, if you're, licking your wounds, go to the large cap projects. I mean, the Ethereum, Bitcoin, obviously, Polygon, Solana. Polygon's been slaughtered, and it's a good project. Great opportunity to add to it. I have very big positions in these names, and I've been nibbling as well. There's nothing wrong. The one thing I would tell everybody is you can't pick the bottom. It's impossible. You have no idea when it's going to happen. But if you're staying long the category, you need diversification. I have so many different positions on right now, and they're all over the map. Now, come year end, what'll happen, because this is a year where we're going to be looking at tax returns on all crypto trading and income, there'll be a lot of maneuvering on the projects that did not recover to take them as tax losses versus the ones that did. And that's going to be the nimbleness of trading. And that's why it's important to look at your positions and make sure you have liquidity in them, because And most of these projects are very, very liquid, so it's not a problem. And we actually haven't seen, we had the Binance story yesterday. They looked for a couple of hours of room on what they called a lazy trade. The Celsius thing, well, that's a gate. That's not good. That will not end well. And when you lock the gate in a hedge fund, basically, you upset a lot of investors, and when they get the opportunity to sell, they do with a vengeance. Never good to do this. Can't help them, but they didn't understand the situation, I guess. But there'll be some money lost there. But Binance is the big daddy of them all on platforms, and they seem to be surviving. FTX looks fine. Circle, rock solid, didn't break a buck. Put out an announcement to their investors yesterday saying, look, to the extent we've had to have margin calls, there hasn't been a problem. I mean, these are the things you look for in stress situations. You've got a lot of infrastructure holding its own. So I think there has been some maturation or maturity coming into the crypto market by these behemoth infrastructure projects. I'll say the same for BitBuy and for WonderFi, holding their own, making sure their clients are being taken care of. I have big positions in those companies as well. So we're all, weathering the storm, and you have to do this. There's nothing else to do except watch with wonder. Well, the great news about the crypto economy and even positions like Bitcoin or Ethereum, these are decentralized holdings. It's not just the American investor exposed here. Bitcoin is all around the world. And it's only 880 billion before the correction, which, as you rightly pointed out, is a big nothing burger. And so that's nothing. I mean, even all of crypto under 2 trillion is still nothing in financial services. So there's so much upside to this sector. When we do get policy, when we get institutional investors and sovereign wealth involved, then you'll start to see real assets. But, if Bitcoin went down another 20%, it wouldn't really matter because it's spread around everywhere. And most of the holdings are not institutional. For all the excitement about Bitcoin, no institutions own it yet. And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody, look, if I believe in 3 years, 36 months, that there'll be policy on Bitcoin, do I want to own it after policy comes and all the institutions start buying it? Or do I want to take a chance and live with some volatility now and buy it here at 24 or 23 or 20,000, whatever it's going to go to? I don't know. But if you believe in Bitcoin, it's a buying opportunity, but you can't guarantee that you're catching the bottom. Nobody catches the bottom. Well, I've spent a lot of time on the Hill in the last 2 months. I've met with everybody that's brought a bill forward. Haggerty, Toomey, Lummis. I mean, there's a lot of interest in this. Here's what I think is going to happen. They're going to pick one thing. They're going to pick one thing and put policy on that. It's going to be stablecoin to start. And the policy there is going to be pretty clear. All the bills say the same thing. They want total transparency. They want an audit every 30 days. They want no duration more than 12 months on any asset holding up the coin. So that means T-bills on average are going to be 7-8 month duration and US dollars backing it. And that's the same kind of rule you're going to find in a Schwab money market or a Fidelity money market or any money market fund, with the benefit of all of these systems, once you put policy in place, having the ability to be a payment system. So I would love to see this happen. And the reason I think you'll get policymakers on both sides of the aisle backing this one thing after the midterm elections is this guarantees making the US dollar the currency of default in perpetuity. Once you back the US dollar on a stable coin, everybody's going to want to use it. I'm not going to use the Chinese one. I'm not going to use the Swiss franc. I'd be worried about liquidity. I'm not going to use the euro. The euro's all over the map. I'm certainly want nothing to do with Russia, and I'm not going to use the British pound. I want the US dollar to be a payment system that everybody else will accept around the world, like they do for commodities like oil. It's priced on the US dollar. So if we get stable coin policy, you talk to any policymaker about this, they get the joke in 2 seconds. It's so simple to understand this. Some of the issuers will become FDIC insured. They'll be like a bank. Others will say, no, I don't want to be FDIC insured, and we'll have a plethora of different offerings all around the same policy. So I can choose, maybe I'll put some money into the Fidelity one. I'm saying the same thing I do right now. I put dollars into the Oppenheimer money market. I put money into Schwab's money market. So the same thing will happen on stable coins. Now, we just have to wait for policy. And right now in USDC, the one that's holding the buck, rock solid, 54 billion in assets, right through the week, right through the correction. No problem with liquidity. I wrote more contracts this week on it. So look, there's a lot of people interested in making this work. I think we'll get policy there first. Crypto will be the 12th sector of the economy within 10 years because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days. And it costs me a fortune, and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out. Now, as an investor, I don't know which of these chains is going to win. Is Solana going to beat Polygon? Should I be in Pollen? What about, all of the others? Ethereum, of course, the big one right now, but too slow for many financial services. What's going on with, Helium and all of these different ideas out there? So my strategy is to do the same thing I do with stocks, get diversification. I own 32 positions, 32 chain projects, 32 different coins and tokens. I have no idea which ones will win over the next 5 years, but I don't need them all to win. I just need a few to win, and that's what diversification is all about. And I've made some investments in the infrastructure. You know that old adage in the gold rush, you were better owning and selling picks and shovels and jeans than you were trying to find gold, because that was very hard to do. The infrastructure of crypto are companies like FTX, I'm a shareholder, Circle, I'm a shareholder, WonderFi, I'm a shareholder, Immutable Holdings, I'm a shareholder. I've given money to all of these projects because they make a lot of sense to me and I use them all. And they're centralized, decentralized, there's stable coins in there, there's the FTX platform, which is the first compliant institutional platform I can find that my auditors and my compliance department finally agree to let me use to store value. And those are the kind of things that really matter to me. And I have to disclose, yes, I'm a shareholder in FTX. I'm also a paid spokesperson. So I'm eating my own cooking, but I'm also talking about the merits of their compliance platform. I'm an investor. I'm constantly trying to find a way, the path of least resistance, to invest my capital, redeploy it. I have to look around the world for opportunities. I have to be diverse. And, crypto to me, when it was being frowned upon by regulators in a very harsh way, if you recall, 2017 was probably the height of when regulators were clamping down on tokens and different ways to tokenize assets like hotels and everything else back then. And as a result, I'm so involved in the traditional financial services market where I'm highly regulated and I have to report almost monthly to both my internal auditors, compliance department, and external regulators all around the world, that's the world I'm used to. And I saw no relief coming from regulators. And then what turned me around, what changed me completely, was when the Canadians, the OSC, granted the very first crypto exchange license attached to a dealer broker. A compliant platform. It wasn't rogue anymore. They told Canadian citizens you can transfer your cash out of your bank into this centralized wallet and you can trade Ethereum, Bitcoin, and slowly more and more coins were added. Then they announced in Canada the very first Bitcoin ETF. Then they announced the very first ETF that was for Ethereum. They were moving forward with policy that was regulated. And I immediately started investing in that because I saw it coming. I saw the writing on the wall. And I've also made the assumption, this is a personal assumption, that the OSC, the regulator that granted that world order for the first time, a dealer broker, was well in touch with the SEC and other regulators around the world. They talk to each other every day. Maybe Canada was being used as a petri dish or an experiment to try it. And it's been wildly successful. That's when I got involved in WonderFi. I became a shareholder there. WonderFi bought BitBuy, which was the first regulated exchange. And now that company has 800,000 registered compliant crypto accounts. It's the model for the rest of the world. So I got on a plane. I went to United Arab Emirates, Switzerland, England, South America, and I started showing these different regulators, look what the Canadians are doing. Can we do the same thing here? And that's exactly how I'm spending my time now, trying to open up these new markets with the policies that have been put in place, tested, and proven to work in Canada. Basically, what's happened to me is I've been layering in now for 36 months. I started at 2.5%, went to 7%, then we went past 15%. Now, in portfolio theory, if you're running, a mandate such as a sovereign fund, let me give you the rules by which those big boys play. And I'm using the same philosophy for crypto. We have 11 sectors in the S&P 500. Portfolio theory would tell you never more than 20% in any one sector, never more than 5% in any one stock or bond. That's diversification, and that's basically how 99% of sovereign wealth is managed by indexers like me and many others that are like me. And so I've done the same thing in crypto. I've said, okay, I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company. And then on down, Polygon, I got involved with Sandeep. I liked his story. I met him in Dubai, trying to reduce gas fees on top of Ethereum. Makes a lot of sense for India and other countries like that, like what he's doing. I bought a piece of that. Love what's going on in the Serum projects. Solana, I'm a big fan of what, Sam Bankman-Fried is doing. These things all make sense to me, but, in the proportions of diversification. Now that portfolio, I'd say about 8 weeks ago, was at 21%. Now it's down at about 18. There's been a big correction in the market, but you've got to hold your nose and get used to the volatility. And it lets me adjust positions. I can add a little bit to my USDC. My compliance department doesn't consider USDC a money market or a proxy for cash. They consider it a highly volatile equity. That's because of what's been going on in stablecoins. So I'm limited to a 5% weighting there, and I'm trying to get some policy while I'm here in Washington. Remember, we go right back to that. Give me one thing, just give me policy on stablecoins and let the market compete. And I can put a lot more into that space because I've got a lot of cash on my operating company balance sheets, and I have nowhere to put it. And inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stablecoins. There's a direct correlation between market capitalization and telling the company's story. Everybody knows I have millions of followers, millions of investors, and I like to talk about the cooking I eat. I mean, I don't invest in projects that I don't use. I don't care whether it's a product or it's a crypto product or whatever. You don't see me in a lot of these very speculative tokens because I don't use them. I'm looking for value there. I'm intrigued by the NFT market, authentication of physical assets around the watch industry. That's a space I'm very involved in. That's a private investment, along with other giant collectors and watchmakers and horological societies. But that's just my personal interest. So it's the things that I really want to dig into, that I invest in. But you're right, there's a lot of room for private projects because, I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. So you want to invest in some of these people. These are the smartest hands over keyboards all around the world. They're not working for the traditional industries. They're on the chain. And that means there's going to be a lot of productivity there. That's what you want to bet on. It's like betting on Steve Jobs when he was just drawing fonts with a felt pen. That kind of idea. It's the same thing going on now. These guys are going to be big productivity for the economy, and you've got to put your money. I give an example that everybody can relate to, because in the early years of Amazon 18 years ago, I was a shareholder, both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now, but this isn't going away, and these senators and congressmen and women know this, and that's why they're bringing these and advancing them. All of these senators were all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment. But boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. I tell people, look, start slowly. Now, for me, USDC has become a very powerful payment system. And more time is going by and vendors are willing to take it. I'm willing to take it. When people want to pay me for goods and services in other countries, I say, give me USDC if you're allowed to. Don't ACH me any capital out of a bank. Don't send me Swiss francs, euros, or British pounds. That's just a total headache for me. Go figure out USDC and I'll take the risk myself on it. But that's going to take a long time to happen. I tell everybody this is the future of currency. It's the future of payment systems. It's the 12th sector of the economy. Get over it and start learning about it. Before the pandemic, if you were 65 years old sitting in a condo in Miami Beach and you never used your phone to order groceries, well, now you do, because otherwise you would have starved to death. You figured out how to download one of those apps and start ordering food. And now you're totally hip to it. And you live your life on your phone. And that was because you had to. The same thing's going to happen in cryptocurrencies. We're going to get some policy. And the first policy, in my opinion, personal opinion here, is going to be around stablecoins. And here's what it's going to look like. It's going to be an open competitive market, just like you can find a money market at Schwab or a money market at Fidelity or a money market at some other financial institution. They're slightly different. Stablecoins are payment systems, but they're also stores of value if you're willing to stake them out. You can make 4.5% on an annualized basis on a 30-day contract today, right now on USDC and other stablecoins. But here's the policy I see coming. 30-day audit on the assets underneath it. You can bring any kind of stablecoin you want, but there's going to be a 30-day audit and what's in there. No assets supporting the token or coin with a duration more than 12 months. So if you're going to use T-bills, they got to be short duration, probably average of 6 months duration. And that's very much like a money market is run and completely FDIC insured. There may even be one or two of these stablecoin operators that apply to become a bank and become FDIC insured, in which case they would get trillions of dollars. And the reason this is going to happen first, why the stablecoin market will happen first with policymakers here in Washington, is that it perpetuates the US dollar as the default currency of the globe. When we get that worked out, the US dollar becomes king dollar in perpetuity. Even other countries, even other sovereigns are willing to bring tokens out backed by the US dollar because they know in terms of attracting people to use them and store them and save them, they got to have the king dollar. And this is why policymakers should get off their you-know-whats and get this thing done, because we don't want the Chinese doing that with the yuan. I would never buy the Chinese yuan as a stable coin. Why? Because I know they're watching it. I don't want them watching my dollars. And I don't trust that currency. I trust the US dollar. So I wouldn't like to find out the Swiss franc did that before us. We got to get this thing done and make the US dollar king dollar all around the world. Everybody will be happy with a product that is backed by the US dollar one-to-one, is liquid, transparent. You can transfer immediately with a full ledger. And finally, I could say to my compliance department, look, we finally have policy. Let me go to a 10% weighting in this as opposed to locking me down at 5%. And they probably could get there because they may consider it a cash equivalent at some point. Very similar to money market accounts that very rarely break a buck. That's the whole idea. And that's what will happen next. Then we'll get policy on Bitcoin. Then we'll get policy on other chains, okay? We'll start to debate, is Solana a commodity or Solana a security? What about the NFTs? One by one, we'll knock these puppies down. And that's the way it should be. But we don't want to try and solve everything all at once. We'll never get it done. We'll never get it done. One thing at a time. Let's start with stablecoins.